So in this video, I wanted to chat with you about the various types of retirement plans available to you as a small business owner, with a focus on the contribution limit. So how much can you contribute to these various plans, as well as when do you need to do so, right? So what are the sort of tax deadlines associated with this? A lot of new and frankly, even existing business owner kind of jack this up all the time. So I thought it was important to create this video and hopefully clear some of this up for you. So the plans we're going to be talking about are the IRA, you might be familiar with that one, the SEP IRA, and the Solo 401k. So we'll be talking about those, how much you can contribute, and when to do so, right? Because there are tax deadlines associated with them. Real quick, if this is your first time watching, my name is Nabi Muraj. I am a CPA that produces content all over social media to help business owners save thousands of dollars in taxes. And so if you like that sort of thing, consider subscribing or following depending on which platform you're watching on, okay? Let me first sort of discuss some of the information here that I have for you. So I want to talk about, and you can see it here on my screen, these are the different plans. I'm going to elaborate on this here in a second, but a quick note, and that is sort of the numbers that I talk about while discussing these different plans are for the 2021 tax year, right? But they're typically adjusted for inflation, sometimes annually or every couple of years. So if you're watching this in a future year like 2023 or 2022, then please just do a quick inquiry online to find out if those amounts have changed, all right? With that said, let's kind of jump into the first one here, which is the IRA. And I included this on here because this is available to small business owners, and you might be familiar with it because it's also available to non-small business owners, right? Employees that are working for another company that doesn't provide a 401k or something like that, they might use an IRA to help save for retirement. So in 2021, the amount that you can contribute is $6,000 into an IRA, whether that be the Roth or traditional IRA. Additionally, though, if you're age 50 or older, you can contribute an additional $1,000. So that would be $7,000, right? The $6,000 plus the $1,000 if you're age 50 or older. The important thing to note here, and some people get tripped up by this, is that even if you file an extension with your individual tax return, pushing that date from April 15th, which is when your individual tax return is typically due by, even if you file an extension, pushing that date to October 15th, that doesn't change the date in which you need to make your IRA contribution. You still need to do that by April 15th, all right? So whether or not you file an extension, April 15th is the deadline for those IRA contributions. So I thought that was important to highlight. A lot of people actually mix that up, and I don't blame them because with some of the other account types that we're about to talk about, the date actually changes, all right? So let's quickly talk about the SEP IRA, which is the second type of retirement account. Now, you can do a SEP IRA if you are taxed as a sole proprietorship, or even if you're taxed as an S corporation, you can do a SEP IRA. Okay, that's SEP IRA. So let's talk about the sole proprietorship first. So you can contribute, again, for the 2021 tax year, up to $58,000, but there is a formula to calculate how much you can contribute. So it's that formula is based on the profitability of your sole proprietorship. There's a couple other nuances there, but the point here is it's based on a formula. And so don't just assume that if you have a sole proprietorship and you're establishing a SEP IRA, that you can, contribute the full $58,000. That may not apply to you. So when is the contribution deadline for the SEP IRA if you are taxed as a sole proprietorship? Well, it's April 15th. However, if you file an extension, which would push your individual tax return filing date to October 15th, then you're also pushing the date in which you can make that SEP IRA contribution for your sole proprietorship to October 15th as well, okay? Now, I mentioned it a moment ago, the S corporations out there, right? If your business is taxed as an S corporation, then you can still make a SEP IRA contribution. A lot of people don't realize that, but it's different. It's different in the sense that you can't, it's not a profitability, it's not a contribution based on the profitability of your business like it is for sole proprietors. It's actually up to 25% of the employees, right, the officer of the company, it's up to 25% of the W-2 wages. So if the business owner was paid a reasonable compensation of $40,000, then the contribution would be $10,000, assuming you chose to do the full 25% of wages, right? So $40,000 times 25% is the $10,000. That's where I'm getting that number from. Now, the contribution deadline, though, with an S corporation is March 15th because your 1120S, that's a tax return associated with your S corporation, is due on March 15th. However, once again, if you file an extension for that S corp return, then that pushes the contribution date all the way to September 15th. All right. So just because you want to do a SEP IRA doesn't mean the dates are generic. It actually depends. Well, are you an S corp? Are you sole proprietorship? The dates, as you can see here, change depending on how you're taxed. Okay. Having said that, let's move to the solo 401k. So once again, if you're a sole proprietor, you can actually contribute to a solo 401k as well as if you're a S corporation. So let's talk about these. So for a sole proprietorship, you can again contribute up to $58,000. Again, that's for 2021. There is a formula to calculate how much you can contribute. So don't just assume you can, contribute that full $58,000. It depends on the profitability of your sole proprietorship, all right? The deadline for making that contribution is April 15th because it's tied to your individual tax return. And again, if you file an extension, that'll push that date all the way to October 15th, okay? Now, the last one coming up here is the S Corp, right? It's the solo 401k. It's also referred to as a solo K and it has various other names. But the S Corporation solo 401k deferrals and contributions, what is all that about? What am I talking about here? So you can actually, with an S Corporation, defer up to $19,500 in 2021 of your W-2 wages, right? Because you were taking a reasonable compensation as the officer of the S corporation. So in our example that I used earlier, if the business owner is taking a reasonable compensation of $40,000, then the business owner could defer $19,500 of that $40,000 into a Roth or traditional 401k. It gives you flexibility. You can contribute to a Roth or traditional. Now, if you're age 50 or older, then you can actually defer an additional $6,500 of your salary into the 401k plan. So that's a pretty cool benefit to make those catch-up sort of contributions if you weren't contributing in your younger days. So one other thing about the S corporation is that the employer, so the S corp itself, can contribute up to 25% of the W-2 wages. So in this instance, right, the S corporation can contribute an additional $10,000, right? Where am I getting that number from? That's the $40,000 of reasonable compensation that was paid to the officer of the company times 25% if you want to go that high. And that's how I got the $10,000, all right? Now, the thing to note here with the employer contribution, right, is that this is a tax deductible account. There's no Roth option for that sort of match, as it's sometimes called, all right? The contribution deadlines associated with the S Corporation Solo 401k is again March 15th if you don't file an extension. However, if you do file an extension, that pushes the day all the way, or I should say the deadline, all the way to September 15th. Now, something to note, you saw an asterisk here related to the Solo 401k. I want to, let you know that, executing this sort of strategy, the Solo 401k with an S Corp, requires some planning, some thinking in advance, okay? So you want to do these two things, right? So you want to establish the plan by December 31st. So we're talking the 2021 tax year in this video. So you would want to have established the plan by December 31st, 2021 of the prior year, because you're preparing this in 2022, to make the employee deferrals, right? To defer that officer compensation salary into the 401k plan. Your 401k plan would have been needed to have been established by December 31st of 2021. And another thing I want to point out here is that when you're determining the employee, and I didn't do these capital E's on accident, I did that on purpose, employee contribution amount, you kind of need to coordinate that with your payroll company and perhaps your accountant if your accountant's running your payroll, because really your W-2 is due by January 31st. Again, using the 2021 tax year as an example, your W-2 would be due by January 31st of 2022, right? So that really forces you to figure out how much you're going to contribute by that day, right? And so that your W-2 will be accurate, because the amount that you defer will be noted on your W-2 somewhere, right? So even though you see January 31st here, or I should say, even though you see March 15th here, really you want to have this all squared away by January 31st at the latest, okay? So the big point here is those employee deferrals, they really need to be happening, in my opinion, throughout the year. So throughout 2021, with some extreme examples of late or, of January 2022 would be the latest, okay? The employer contributions, right, what I refer to as the match, even though it's technically not a match, those can be done with these deadlines here, March 15th, or September 15th if you're an S corporation, all right? So that's really all I wanted to share with you. As I mentioned, a lot of business owners make mistakes here, so I thought it would be important to help you sort of clear that up. Hopefully this video did that for you. So don't forget, if you learned something or got value out of this video, please consider subscribing or following, depending on which platform you're watching this video on. And you can always find more resources, most of which are free, on my website, which is NaviMirajCPA.com. Let me quickly kind of bring that up for you. It's NaviMirajCPA.com. And you can see here, there's a bunch of different resources, a free income and expense tracker for you to track your income and expenses throughout the year. You can use these websites to create an LLC, some of them for free, and some of them you can create an S corporation for free. You can schedule time with me if you have specific questions. And the list goes on and on and on. There's a bunch of free resources here, so check out the website. Again, it's NaviMirajCPA.com. Again, if you're watching on YouTube, stick around. There's going to be some videos popping up here. They're probably already on your screen now that you might want to check out if you found this video something of interest. If not, I will see you in the next video.